Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. On this special episode, we have partnered with the guys over at Treasury 101 to discuss different payment types, terms, and definitions that are used in the US. Treasury 101 is yet another great podcast where treasury and finance topics are broken down and explored. Please enjoy this episode and be sure to check out the Treasury 101 podcast on your favorite podcast platform. Enjoy.
So, Craig, Guillaume's taken us through in the past this whole payments journey where we've talked about checks, cash, debit cards, these kind of all these different mechanisms of making payments and the pros and cons of each. But we haven't really gone too much into the specifics of what kind of payments you would find in the US. So could you take us through overall what kind of payments you find in the US and maybe what's unique about it?
When I think about payments, I break them out to the what individuals use, or the business to consumer or consumer to consumer. But also most of our work in the consulting world is with to business payments. Most of those are business oriented payments. So checks are still a big issue. I know, parts of the world look and say, US is such a high tech country. Why do you still have checks? Well, those are items that start off as paper. They never make their way physically to the originating bank in a paper form, but checks are a big one. Then we have different types of low value payments. These tend to be like card payments, ACH, which is an electronic fund transfer. It's starts off as a digital transfer. And then as we look at high value transfer, there's several types of wire types of payments. On the consumer side, we have different services like PayPal, like Zelle. There's a huge number of payment methods. We can transfer money between family members or friends. If you go out to a meal and someone pays for it, you can just zip the money instantaneously. And so those are really common. So are the different wallets that are usually and typically stored on your phones. But from a corporate standpoint, it's mostly check, card, low value and high value payments. And there's a range of offerings of those services within that setup. Different types of card payments, purchasing card, virtual cards, ghost cards. On the faster payment side, or the more rapid payment side, we have different types of ACH. We have what's called real-time payments and FedNow, just faster payment schemes. Quicker payment schemes maybe is the better term that doesn't infringe on certain naming conventions.
So those are a lot of terms. Awesome. Thanks a lot, Craig. I would like to dig a little bit into some of the things you mentioned. First of all, to begin with, so we had a series of episodes actually on checks. Why do people keep using them in the US then, if they're even dematerialized at certain points in like the payment scheme? Because, right, once you deposit your check at the bank will not send the check physically to the other bank to clear it and so on. It will more be done digitally. So why do people keep on using them?
I hear the jealousy in your voice, just because
that's spot on.
Well, it's. I used to be really embarrassed. Now I'm just sort of embarrassed. But it is moving. We're in an era of less and less checks every year, and they do get dematerialized. Back in 2001, there was this huge push because checks you would write them, and they would be deposited at the pay's bank, and they would move physically move paper all the way to their bank. And if you're old enough, like I am, you used to get the physical checks back in an envelope at the end of the month. Like paper sent all over the country would find its way back to you, which is amazing. That's where I comment about the jealousy, like who can handle paper like that in the volumes? Well, somewhere right around the turn of the century, it changed, and check 21 and image presentment is like, once it goes, as soon as someone gets it in a lockbox, at a bank, or they receive it, they snap a picture with their phone and it converts it to an image. And the image is what travels all the way through. It converts it to digital information and settles. So it dematerializes it as quickly as possible. Why is it done that way? We got really efficient at moving paper around. And if you saw how that stuff was processed, you'd say, if you look at a lockbox, you say, wow, that's really fast. The paper is about to burst into flames, how quickly they move it on machines. But that's the limitation of how much you use paper. Paper is terrible. Some people like it because every system was set up to issue it. It's simple. One of the nice things was once we hit COVID, that was one of the nice benefits of COVID was that people are like, oh, nobody wants to print checks or stick them in the mail. Nobody can receive them. And so there was a big push towards electronic. Those things have helped. So we are in an era of less checks. I don't know why we still use them. If my kids ever have to write a check, they're like, why do I have to write a check? Dad, can you write a check? And I have to find my checkbook because I don't write checks. But it's diminishing, but it's just what we've done, I guess, and it's disappearing.
Fair. It's embedded in the culture and the usages. But okay, there is a shift towards more electronic way of making payments. Another term you mentioned was low value payments. And quickly after you mentioned high value payment. Can you just quickly explain us what are those and the difference between the two?
It depends on, what country or even sometimes what region, how you define those. And so I find the description of low value payments and high value payments more common globally than wire and EFT. In the US, we have a wire transfer system. These are high value payments or real-time gross settlement systems. So high value payments are, they're always revocable. They usually settle through a central bank system. They're usually large sums, lower volume, but high value. And so depending on what country you're in and what payment system you're used to, they're higher value. Low value payments, in the US, people think of direct deposit. When you get paid, it's a lower value payment. If you have, your accounts debited for utilities, those are low value payments. Those are primarily automated clearinghouse payments, or ACH, in the US. And so those are low value payments. So part of our consulting practice, we help companies implement and connect. And do you need high value or low value? How timely does it have to be? What's the size? What's the requirements for revocability? Those are probably the biggest deciding factors between high value and low value.
Okay. So there is low value and it will be treated in a certain amount of time, and high value will be like bigger amounts.
Urgent payments. Again, SWIFT, they call them urgent payments.
Oh, okay.
And then non-urgent payments is like, depending on which scheme you come from. If you're like, SWIFT, it's urgent, non-urgent. If you look at different banking systems, it's high value, low value. If you're in the US, it's, wire and ACH typically.
Awesome.
So there's not like a dollar value drawing the line between those two? It's really just like the type of payment?
Correct. There are limits on the lower value payment systems, depending on which one it is. So there are some limitations. So if you wanted to send $500 million US, you can't use a single ACH to do it because the limit is 1 cent below $100 million. And it's really driven by how many fields exist in the record. So you can send $99,999,999.99 via an ACH. If you want to send more than that, you have to send 2 ACHs because the field size only contains that much, whereas wires, you can do more. Some of the other lower value payments have limits like $1 million, $500,000.
Yeah, so I hope no one's utilities bill is that high. So it makes
it better not be, right?
Nowadays. So bringing that to corporate treasury then, Craig, what are the pros and cons of those, and which ones would corporate treasurers in a corporate fashion more move towards and be relevant to them?
Yeah, historically it's been heavily ACH and wire. So wire is we need irrevocability. Once we send it, we want to make sure it's good funds on the other side. There's no way to pull it back through the payment system. You'd have to use the legal system if there was some type of error or some type of issue. You're doing a closing on, real estate, or you're buying a business. Everyone wants a irrevocable type transfer. More expensive, a little faster. If the lawyers are sitting in a room, You want that to go quickly. But it's definitely more affordable, less costly for the transaction if you use something like an ACH. So those are the two big ones for using traditional payment rails. Now there's a lot of card use. There's some newer payment rails as well that are having a significant influence, but the biggest ones are ACH, wire, and certain types of card, like purchasing card or virtual card, to handle some of the AP activity.
Could you define what ACH is for the non-experienced treasurer? What does that stand for?
Well, it stands for Automated Clearinghouse, and maybe a little bit of background. So the U.S.'s central bank is the Fed. I think most people here, the Fed is that's, you may not know every single country's central bank, but the Fed is a behemoth in what it does. And so central banks oftentimes act as clearing for payments. And, the National Automated Clearinghouse Association, or the ACH network, the Automated Clearinghouse Network, handles these low value payments. So it's, automated clearinghouse, a clearinghouse so that, it's a hub. You send payments in there as a bank and they send payments out. There's a body of rules, the NACHA rules, and there's the ACH network that handles the movement of value transfer. Those settle to the different accounts on the other side.
I'm super interested into digging into what ACH is, but you also mentioned wire, real-time payment. So those are instruments I would like to break down. But before this, and maybe staying a little bit high level, there is a term that I keep on hearing, which is payment rails. Can you break it down and explain us what it is?
It's a visual image, a material image of a digital transaction, right? So rails that you have trains run on. So how do you settle a wire payment? Well, maybe you're using the Fed wire system or you're using chips. How do you settle a low value payment like ACH? You use the clearinghouse rail. How do you settle your cards? Well, you use the card network. It's a card network rail. So it's just maybe a more common or vernacular type term that lets you say, oh, here's the channel we're using to pass these on, or the rail. It's a hipster thing. Use it and you'll be hip.
Okay, so to make the link with an episode where we broke down card payments and card payment networks, this will be one rail. The one you just explained, the automated clearinghouse, will be another one. Yes. This is what allows the payment to be settled, so the transaction to be effectively happening with the transfer of the money arriving on the account of the beneficiary. That would be the payment trail.
Yes.
And to go back to the US then, what are the most popular payment trails in the US? And since you mentioned both, for like the individuals, as an individual, what do I use most commonly, or what is my bank using to process my transactions? And then from a corporate treasury standpoint, what are the payment trails that we would then prefer?
Well, on the individual standpoint, probably depends on your age cohort, but the card network, the ACH rail, those are really popular ones. When I'm paying people personally, it's Zelle, PayPal.
What's the other payment trail, the rival of PayPal?
One of them is Venmo. There's a huge number of different payment applications, but Venmo and Zelle, and using PayPal. So individual transfers, those are ones people use. Venmo and Zelle are really, really popular. Zelle is associated with your banking information, so money comes in and out of your bank account. The bank sponsors the activity, and so it's easy to use and see. When you use other ones like Venmo, there's a separate store of value. You store money with Venmo, for example. So there's just a couple different methods. So Venmo has long been very popular. Zelle has grown extraordinarily fast, and I believe it's overtaken Venmo on the consumer side. But that's certainly not an area of expertise of mine. But bank support's proved invaluable for their activities.
Okay, so that would be for the individuals, along with the MasterCard, Visa. I would suppose in the US, American Express as well. If we look more on the corporate treasury side, what are the preferred payment rails usage?
The biggest ones are ACH is the most common. Besides checks, I mean, checks are still a dominant force even on the corporate side. They're diminishing, and ACH wire transfers are still popular for large payments, but they're very low volume. Certain types of card transactions, like virtual cards, purchasing cards, specialized cards that attack a whole section of the economy are big ones. The use of some other payments like RTP and same-day ACH are used. They're more specific. Some insurance companies focus on them, or when people need to pay payroll very quickly, they'll use same-day ACH or RTP, in increasing measure. But those are still very small by volume and values standard today.
Mm. So these payments that you mentioned earlier, the high value payments, they will be urgent versus non-urgent, but you can have an urgent payment that is very low value as well, right? And in terms of amount, like I don't know, payroll, for instance, for a small company, I still want it to be delivered on the very same day to my employees. I will use an urgent payment or a high value one, even if the amount is low. Or am I mixing up stuff here?
Yeah, that would be mixing a few things. So if we're using the term urgent, well, at least how I'm thinking of it. So if we're using the term urgent payments and non-urgent payments, I'm going to be thinking of the SWIFT definitions. When you send messages there, I'm going to think, okay, it's urgent or non-urgent, because SWIFT has to take messages for everything that eventually their payment instructions, the actual settlement, whatever the rail is going to be urgent or non-urgent. Like in the US, it'll be wire or ACH, for example. So if you need to pay someone payroll today and you were really late, you might use a wire, but you might use the same day ACH or a real-time payment, for example.
Makes a lot of sense. Okay, and to wrap up on this corporate treasury aspects, no usage of blockchain payments so far in the US that you have seen, or is it a technology that is not yet there?
Well, there are a few supply chain vendors that use activity related to blockchain, but there's not this is not an adopted method of using blockchain for settlement.
Is there a specific limitation on blockchain? It was all the buzz for such a long time. It was going to revolutionize payments and it was going to eliminate counterparty risk and whatnot. What do you see as like the limiting factor in blockchain and why it hasn't taken over by storm as it was meant to?
Well, I think the a lot of the focus and attention has been on some of these newer payment rails, faster payment rails that tend to be lower value. And so, but still, if you look at same day ACH, you can send $1 million. RTP, their limits increased also to about $1 million. So there's some, like RTP is a new payment rail. Same day ACH is using an old payment rail that you send it in the same format. You just have a different settlement date. And so instead of batch overnight for regular ACH, it was a batch system, like all the payments go, you send it today, it settles tomorrow. They just process it in batch, a very efficient method of processing. And then the settlement occurs the next day. And so they've retooled that network to say, now there was 2, then 3 and 4 windows where you can send it. And there's just faster windows where it can make those funds available, on the same day. So basically like 4 overnights, if you will. And so there's some rules for that make it work. So there's been a lot of focus and growth in there. Banks and corporations are spending more time in there. On the blockchain side, for, having this idea of there's a distributed ledger where you can track items. That's really great for, documentary collections or information. Like, I'm trading, I want to make sure everyone has the right information, a network view of things. That's where those things will grow and be handled more effectively. So taking steps in those directions, and corporations are looking at them. I would say it's still early days, really early days for that. So it's not like there's hatred of it or people are against it, but it's, both parties have to be developed in those areas. I think there's a lot of value in, the concept of this distributed ledger as opposed to having, You always have to go to banks to do this. And it's based on paper processes. Now it's based digitally that we can manage it. So it takes a while to change this, change the tech that we use to replace older, historical, slower methods with better, newer methods, right?
The only corporate treasury area that I can think of is starting to use blockchain, or at least where we see a very useful usage, is trade finance. As you mentioned, it's for very much like documentary purposes, and there it makes a lot of sense. But we have yet to find a guest to talk to us about this. One last term, we love to break down acronyms. Craig, you mentioned RTP.
Yeah.
What that is?
Yeah, real-time payments. That's a faster payment scheme. That's through the clearinghouse. So I'll probably have to tell you what the clearinghouse, or TCH, is as well.
Yes, indeed.
So,
well, I mean, maybe that's a good way to just overall, Craig. I mean, I'm struggling a little bit because you say so many times like it needs to be processed and it needs to be this and that. Could you like just break down overall what an electronic payment actually like is and like what the various steps are? Because to an end user, it's just, I send money gets received. Sometimes sometimes instant, some other times it's like 3 to 5 days. I never really know why. What actually is an electronic payment at its core?
Electronic payment at its core, I would say it's a value transfer instruction that begins and ends electronically. So there's no physical aspect to it. It's a digital instructions to handle this. And your question is easy to answer and hard to answer, right? At the simplest level, you send an instruction and it goes through, depending on which type of payment you're talking about, its journey, its rail can pass through different places or clearinghouses or networks before it actually settles, before the value is transferred in someone's account. So that's where you get hung up. Once you start to know everything that happens in the cloud, like you said, hey, I send money and they get it. That's great. That's like, I make like phone systems. If you ever looked at how people design phone systems and how they drew them in schematics, it's like there's a call, you have a local PBX, private branch exchange, it goes into the local network, and then they draw this big cloud, and then out pops the other side, the same type of connection to the other person you're talking to. And what is that cloud? That symbolizes all the switches, all the connections, all the protocols that happen, and it sticks out the side. It's kind of like, oh, that's magic. So in the payment side, and this is probably almost impossible for people to follow audibly, but like if I send an ACH payment, who are the parties? I'm sending it to someone else in the US as a company. When I originate that, I have to send it to my bank, and they call it the originating depository financial institution. And so they're a member of the ACH network. And so they put it through, let's say in this case, they're putting it through the Fed, the central bank system, NACHA. So they're putting it through the ACH network. So they're putting it through the ACH network. The transfer moves over and then it settles in the bank's Fed accounts from the bank perspective. And then they post it, the receiving depository financial institution, in other words, Hussam Payne's bank, the bank that, let's say my supplier gets the payment into their account. So there's a lot of steps in there, but the other side just knows I got the payment. But how it traverses to get to their account can look differently. I don't know. The other complicating factor here, it's most of the payment systems that the U.S. has, there's separate networks that can handle those. So like for wire transfer, you think of, most countries use the central bank for, payment settlement, payment rails. The U.S. does that too through the Fed. So like the Fed wire system is run by the Fed, but there's another wire system that your bank can use. It's chips. It's part of the clearinghouse. It's a private network. The banks own it. So they don't have to go through the Fed. They can go through their own private network. And same thing on the ACH side. You can use, the ACH network, essentially owned by the Fed, or you can use the clearinghouse. It's a private network. So I don't know if it stems from we're a certain size economy, if we're just so independent, we always want some type of competition. And so we have, two ways of settling ACH, for example, two ways of settling wires. And those are oftentimes decided by the bank unless they give the ability to specify the payment network. So that's why you might want to just draw a big cloud in there instead of all the permutations that could go.
That's perfect. What are those two ways of settling it? The ACH and the wire? You said there is two options every time?
Well, yeah, there's two options. So you can use the ACH network or you can use the clearinghouse. So both are ACH formats. They both, follow the same type of rules. But one goes through the clearinghouse, which is private and owned by the banks. And the other is through the Fed system. And same thing with, wire transfers. Well, same type of thing you can use the Fed wire system or you use chips. That's also a private network. We used to do that. I don't know if it still exists. It must still exist today. It still exists today with checks. You can settle by presenting your checks to the Fed. Usually it's done by an image, or you can use, the clearinghouse for that. Yeah, I could tell you a story about 9/11 and what that meant for the Fed and all the checks that used to fly across the country on planes. And since no planes could fly, nobody could do the direct presentment. And so they dumped all of the checks at the Federal Reserve Bank, who had to give them availability. But the Fed couldn't get them physically delivered to the other places. So they just sucked it up, to the tune of massive sums of money, right? It's like, oh, this network won't we'll use our failover network, dump it to the Fed.
But so wait, what happened? Has the money been settled in the end or not?
Oh, they had to give, checks aren't instant. So the money doesn't transfer instantly. There was availability schedules, right? Because there's inefficiency. It would take 1 to 3 days to move across the country and for the payments to be presented. So you have these availability schedules. The Fed offered availability schedules. And this is all historical, so much more historical. So if you dump the checks there to the Fed, they gave you availability 1 day or 2 day availability of funds based on where the check was drawn. But that assumed normal operating conditions, and they just had to honor that as the clearer of checks.
So is that kind of like why there is this secondary system? Because, why would the banks want the Fed involved if they can just do it themselves? Is it just like a fail-safe, and that's why it's still sticking around, or?
Secondary systems they're owned by the banks because they can oftentimes do things more efficient, more quickly. Getting the Fed has to do things for all of the banks. In the U.S., I don't know if there's 6,000 or 7,000 banks in the U.S. I could have queried that. We have less banks all the time, but they do things for every single bank. But many of the bigger banks can get together and say, we clear so many ACH between ourselves. If you look at the $1 trillion banks, we clear so many ACHs between ourselves. The Fed charges this rate. If we pay into this group, we can do it for way less than that. And so they all do that. They'll clear all those items there. And so it's just, it's an efficiency play to set up the private settlement methods, primarily.
Very cool. One step back from that, Craig, why do I need a clearinghouse in the middle in the first place? Like, can't just one bank just send money to the other? What's this intermediary? What's the actual purpose of it?
So certainly you could send money. So how would you send the money? Usually there's these accounts that they maintain at the central bank. And so when they send money to one another, what are they sending? They're not sending physical goods. If they send money, they're sending instructions that say, what I owe you and what you owe me changes. And so if we have accounts with each other, we can do that and just change our individual balances between those on a bilateral basis. Every bank is going to be, let's say, a participant, with the Fed. And so they have accounts with the Federal Reserve. And so they can use those balances as opposed to having running balances with each and every other bank, so that, your balance at the Fed is a easier way to do that than to have balances at every single bank that you would deal business with. I don't know if I got to the core of your question or not.
So the way I understand that then is I mean, yeah, if you look at it as an individual transaction, you could perhaps do like one account to the other, but because so many are happening simultaneously, you just kind of like change the owed amount between them. And if the Fed has all these accounts, they can just like settle everything inside the Fed accounts instead of actually transferring money from,
exactly
JP Morgan to Chase.
Yeah, no, I mean, that's someone it's like if each bank had an account at the other and they both held money at the other bank and then they were going to be sending money to each other, how would they do that? They could say, we agree on I'm going to move $1,000 out of my account at your bank to this person that someone on my side is paying someone at your bank. And so they take $1,000 out of my account in your bank and move it to Joe Smith or whatever. We move it to that account. And so that's how we pay a customer or a vendor at your institution. And so that would mean that we have accounts with each other.
That will be a massive tree count for banks.
Yeah.
Or splitwise. I don't know which one is the most used in the US, but that's a big deal.
We wouldn't use that. It's kind of like it's kind of like to the extent of why don't we do direct phone calls? It's like we have a separate line running between the three of us. It's like if it's just two of us, you run a wire between our houses, and it's like great, we can talk. Now we got three, so I've got two wires, you've got two wires, everyone has two wires. They add another person now. It's instead of six, it's now you just keep expanding it. So this is it's just a way of netting and settling that activity more efficiently using the central bank or using the accounts at the clearinghouse.
I like that analogy. That explains it very, very well. Thanks.
Greg, sorry, but you're shooting amazing knowledge at us, so we just make the most of it. Where does Swift sit in all this? Where's the link? Is it separate? Is it an other payment trail? Or is it sitting in between, above, as an overlay? Can you help us understand it?
Sure. Swift is a standard setting body for like formats. They're also, so they help set up methods of communicating and formats. They're the second of multiple items. I'll just talk about this for context here. Is they're also a messaging network. They support, messages. So there's non-repudiation. Someone can't say, I didn't really send this. I did send this. So it's all the instructions that primarily banks use with each other, but also corporations can send to, banks, so they can initiate payments or receive information. So they're a giant network or a hub. They don't actually settle the money, but they deliver all the messages that are required to settle all the money. So it's kind of like communication. Like even though if I send instructions to Swift to my bank to move money from here to there, the message tells my bank to move it. And the bank's like, okay, I'm moving this via Fedwire. I'm moving this via chips. I'm using this via taps in the UK, whatever. It tells you, it gives instructions to the bank how to move it, or the bank decides how to move it for them. So the execution is on some actual payment rail, but the messaging network is very, very commonly Swift for many, many companies. In the US, people do use Swift for payments in the US as a messaging. They tend to do it less frequently. They tend to go, directly to the bank and say, use this Fedwire. They'll send a Fedwire format, or they'll send the ACH format or some other instruction.
Super clear. So Swift is the messenger, and the clearinghouse will help the settlement. Okay.
Yeah. So for example, like if there's sanctions going on and someone gets cut out of Swift, that means they can't send messages, and it's like you can't communicate, right? You can't communicate. That doesn't stop the settlement, the actual settlement rails, but it stops how people communicate about things. So it's pretty essential for moving money. And banks communicate with each other through Swift very, very heavily on a global basis.
Super clear. Okay. Back to those ACHs. I'm really curious to understand it better. So we have an understanding of what it is and how it works, but if we get a little bit into the nitty-gritty details, like what is actually the processing time of a payment executed through ACH? You mentioned earlier the cost. What's the cost of an ACH? Is it cheaper than other, like a wire, for instance, or RTP?
Yes.
and so on?
It's really cheap. Yeah. So in normal, very moderate volumes, it may cost a dime or 25 cents, 10 to 25 cents. Really high volume activity, it gets driven way below a dime. It becomes very, very inexpensive to move that. It's a batch system. So the time frame is, generally it's overnight. So you can send instructions now and you say the settlement date will be tomorrow, the settlement date will be next Monday or Tuesday. And the settlement date will trigger when the funds move. But the normal ACH, the regular ACHs since 1974 are always, next banking day or beyond. Now, same-day ACH, which started in 2016, allows, within given windows, this batch process. This batch process still works, but they incremented additional windows. So instead of just waiting for overnight, they have other windows that they can process and settle the same day. Those are, banks obviously charge a little bit more for those because there's a separate speedy cycle and different process. Yeah.
Okay. And you mentioned the limit earlier. What was it again? Is it 1 billion is the maximum amount you can use? No. What was it again?
So on a single ACH, the record, the field can handle up to, what is it? It's just below 100 million. So it has enough records for 6, 7, 8, 9. I don't know if there's a period in it or not. Might be 11 characters or 12 with a decimal point. So it's probably 12 with a decimal point. So that's the limit there. On a same day ACH though, the limit is capped at 1 million. Usually due to speed and the concerns on fraud. So just like most quicker payment schemes, they start low and they keep increasing. So I think that's the third level they're at. I think it started at 25. I think it started at 25,000, moved up.
Is there a difference between an ACH transfer and like a wire transfer?
Yeah. So two things. There's a revocable part of an ACH transfer. Though if there's a fraud or an error, there's a certain amount of time that a company or a consumer can respond. So if there's an error, maybe I was they were debiting my account for the gym membership, and I canceled it, but they kept debiting it. So there's a period of time I can revoke those and say these are unauthorized. So ACHs have a revocable time period. It's extremely limited on the corporate side. Whereas wire transfers are irrevocable. You can't force it back through the payment system once a wire's gone. You can ask for it, and you might have to go a legal route to get it back. So those are two of the differences. The cost is different. Think of wires as wires are oftentimes $10 to $25. If you do really high volume, it dips quite a bit below that, but it's a more expensive process. And the transfers, once they're approved, are essentially immediate, but they have to be approved by the bank, and so that will take a little bit of time usually.
How much time do you have to revoke a payment like this then? Like what's the window? 5 minutes, 10 minutes, an hour?
For a wire?
Yeah.
None.
For an ACH then?
But for an ACH, usually it's I can't remember the exact rules, but like on a consumer, usually you have enough time for when you get your bank statement at the end of the month. You have a bit of it. You have quite a bit of time. On the bank side, you want to be checking your accounts every day because the window is really short. You do not have a week. It's like you want to do it every single day because based on the cutoff, I think it's about 2 days is the max. And so you want to check every day to make sure you get the window if there's a problem.
So is that driven by the mechanism of a wire? So do they not have
rules? It's driven by the rules.
So so does a wire transfer between two bank accounts also have a central like common entity that's settling them, or is it like a direct transfer? What's the process difference between a wire and an ACH transfer?
The ACH is batch, so you're sending in a file. Let's say you're paying 1,000 employees, so there's a single file that goes in that has credits to 1,000 employees, and it has an offset to your account. So your account will be reduced by the amount of payroll, and then all those individual amounts will eventually make their way to the end consumer. So that batch goes to your bank and they submit it through, let's say, in this case, Nacha, and then they will deliver that to the ACH network. They'll deliver all that settlement information to the banks of those 1,000 people. The Fedwire is an individual transfer. And so you send it, and let's say they decide they're going to send it through the chip system, or Fedwire, so that you send a single instruction, gets approved, it gets transmitted to the Fed system, and it settles between the two accounts that the banks of the sender and the receiver have. And then the receiving bank takes the funds that they received and posts it to the recipient's individual bank account. So they handle it for them. So that's really a quick process for the settlement there.
Because it's done on like individual account by account basis and not like as a batch process.
Yeah, it's much more real time. The stuff's processing constantly, so it's moving as quickly as they can. Once it hits the thresholds that it's approved, and the bank submits it into the Fedwire system or into chips, it goes extremely quickly.
Okay, and is there a similar field limit on the wire system?
I don't know that I haven't been so close to looking at formats on Fedwires for quite a few years, but I do remember some banks had limits, like you couldn't do, you could do up to $1 billion per wire. And so you'd have to do, like if you had to do a $4 billion wire, you might have to use 4 or 5 transfers. I don't think that's a Fedwire limit, but that's something that could be looked up. I don't know on that.
That's okay. No worries at all. Okay, so, and you would choose to do a wire over an ACH because of the nature of wanting an individual transfer? Like, because if it's more expensive, but it's probably quicker, well, it's just based on your need?
It might be based on contractual requirements. Like when we settle this, or our bond payments, our bond interest payments, the recipient's like, you got to do those by wires. I don't want them called back if there's a concern about bankruptcy or some dispute. So they're usually driven by contracts, but it's contracts and then driven by the need for something to be irrevocable, something that can't be returned.
And they always go through the Fed network, or do banks also have their own private networks?
So it can go, wires can go through the Fedwire system or through the clearinghouse chips system. So those are the two. That's the private one. Private is chips, and the federal system, central bank system, is Fedwire.
Is chips like chip and pin chips or fish and chips? What kind of chips?
It's like all chips, and then it's a word that sounds the same. No, I think it's, yeah, you're breaking me on the definitions. We get used to these acronyms. Yeah. Forget it. It's like it's
Corporate Treasury 101, Craig. 101.
You're breaking me. I should have put those down there. It's like
so Google says clearinghouse interbank payment system.
That sounds good. I knew the clearinghouse part, but
makes sense.
Yeah. So it's maybe it's not like the fish and chips.
Like fish and chips. Actually, be a little bit hungry. So, Craig, if wires are so instant, you just need the bank like approval to go ahead with it. What's a RTP then? You said it was a real-time payment. Like, there's something faster than instant? How does that work?
Well, the wire transfer system and the ACH network, those are quite old systems. They're, over 40 years old. So they're designed with technology that works a certain way. RTP is essentially instant in terms of delivery. And while the limit's $1 million, it costs about a nickel to use that system. And so it's really rapid settlement. You can include, some more information about the payment. So it's easier to integrate to. It's more expandable. As a new payment rail, it's new tech, right? So, it's like, we're talking about payment systems, like it's like phones, like they're all phones, they all transfer money, but some are less expensive, some are better. It's like we got a landline phone, we got an old bag phone, we have really old cell flip phones, and we have some of today's smartphones. There's a significant variety of what's out there for payment systems. So RTP a new system up since 2017. Yeah. So
it's as recent as that.
yeah.
What's different in the mechanism behind it that enables it to be faster?
Well, it's a payment system. I just call it like a payment network or payment platform, which operates. I'm trying to think of how I would say this. I'm not an expert on how it all operates, but the newer tech, when I think about payments, how payments are made, it's like there can be greater visibility. You can put more information in there. If you think about things that sit on Azure or Amazon Web Services, you have all kinds of additional capability, function, speed, scalability that is very different from some of the linear approaches that all of the older payment systems took, or most of the transformation that take place in the technology supports the payment process as well. Just like everybody's moving to S/4HANA from an early version of SAP, it's like it's a different type of platform that's not ancient.
Craig, I have my consultant census tickling. What are the costs of RTP versus wire? I would imagine they are higher than an ACH, right? Because you mentioned that it would be the cheapest option, likely. What are we talking about in terms of cost for wire?
Yeah, they're pretty standard. They're like 4.5 cents. There's a couple other things. So it's pretty cheap. They're around the cost of an ACH. It depends on the volume you're doing. The higher volume you do ACH, you get it down. It can go quite a bit below that, but it's fairly standardized at 4.5 cents. So it's pretty affordable. Yeah.
Okay. Awesome. Are there any other electronic payment types that we didn't mention that are used in the US?
In July of 2023, the FedNow system is supposed to be live, and that's been confirmed by them. There's a link. Yeah. Look at that. The default will be 100K limit, but the physical limit is supposed to be 500,000, and that'll cost 45 cents a transfer. So that's probably a whole nother 101 episode.
Indeed. That sounds expensive though, compared to the 3 other payment methods we just mentioned. 45 cents.
Well, yeah. So what's the total cost of transfers and what you have to do to monitor and track? When you look at the total cost, these newer ones are really, really quite good. When you look at the older systems and what you have to do to communicate, to pass information, to share, to connect to other systems, it's fairly transformative, but that you have to look comprehensively at that. But yeah, 45 cents is 10 times 4.5 cents, of course.
Right.
But depending on what you're trying to do.
Okay. You mentioned quite sometimes batch payments, especially for the ACHs. What are those exactly?
So batch payments as opposed to individual payments. So batch and forward systems, that's like the ACH network. It's like you do payroll or you do AP. It's like, hey, what are we paying today? Here's my payment run. And I'm making these 50 payments or 5,000 payments. I send a single file as a batch. And because it's batch, it can process, in the most efficient manner, not the quickest manner, but the most efficient manner. And that's why it drives the cost down for those. The other, the single entries, the more individual, like a wire transfer, I enter it onto the bank portal. As soon as it's approved, it settles on an individual basis. It settles to your account on an individual basis as well. So if you do a payroll settlement, there'll be a debit to your bank account. That debit will be for the entire amount of payroll in mass. It won't have the 1,000 employees have individual debits. It'll be a single debit for the $1 million.
Yeah. Okay. Super clear.
So Craig, thanks so much. I feel like, we love getting to the nitty-gritty technical details about how things work. So definitely been super informative in that aspect. Can you bring each of those? So we focused mainly on the ACH, the wire transfers, and the RTPs. Can you bring each of them back to corporate treasury? So as a corporation, if you're paying suppliers, doing payroll, paying your bills, gaining payments from your customers, what are the considerations that a corporate treasurer needs to take when looking at these different payment mechanisms and which ones they want to be focusing on? What's driving those decisions?
Things like the revocability is a concern, the cost, not just the cost from the bank standpoint, but the total cost of the process. And that involves how are we communicating with our trading partners? How are they communicating with us? Every payment is reconciled. Every AP is an AR. Every transfer has a recipient, and they're recording and reconciling those in different systems. So, what information, how rich that information is that travels with the payment matters. So those are some of the considerations. The other probably more practical considerations are what types of payments types does our formats and types does our payable system manage, our treasury system, our AP system, our admin system. So those are some of the concerns. Like, we can't support 12 payment systems. We've got 3. We want to add a 4th one. So those help drive a lot of those decisions.
And the richness of the information point is quite interesting. Is that just from like a system requirement point of view? Because you just care about like the APs and the ARs? Or is there any other like data that transfers that would be valuable to a corporate treasurer? Like in their ability to understand and optimize their treasury systems? Or is it really just to execute and make sure the machines can talk to each other, that information?
Yeah, I think it's both. It's one is so that it executes and settles properly, so it goes to the right account. But then if you're talking about receivables, they want to assign and apply. They want to assign it to the right, who's paying them, assign it to the right customer, and they need to apply it to the right invoices. And so there can be differences, short pays, changes, errors, whatever. So making it so that the defects that occur to change the amount are fixed or communicated, and so that it's clear what are we paying for. Because if you don't say what you're paying for and they get this payment, what happens is you're no longer electronic. Now you're hypermanual. Like someone's calling up and say, what is this payment for? They're sending an email, and there's latency issues of delays of time and following up. So if you really look at the end-to-end process, you want to set enough information so the other party can do whatever they need without having to contact you.
As a receiving end, how do you monitor that? Because for the payments you send, you want as less trouble as possible, I guess. You don't want your suppliers to come back to you, hey, I didn't receive this, or it's not in the correct format whatsoever, having an error message. But when it comes to the payments you receive, so the collections, can you really, on top of, getting money from your client, tell them, hey, look, it needs to be this specific format with this specific information so my system can reconcile properly? Or how does it work here?
Well, since the customer is always right, it's kind of hard to force them to include all that information. So they may say, we would like you to send the information included in the addenda records in an ACH, include an EDI BPR segment in the ACH so that our system can automatically apply it on a detail level. Or you have a paying format, you want all of the instructions of what they're paying for to follow the XML format that exists. You can ask that. And banks and, integrated receivables providers and others have a whole process of combining multiple payment types, multiple sources of information that may or may not travel with the payment. So you may have a payment that includes all the information about it, or they may send a payment by itself, and then maybe they email, the information about the 15 invoices they're paying for with the short pays or discounts. So marrying that information together and then processing it it's a good business to be in.
Take us through what you do at the Strategic Treasurer.
Sure. So I'm the managing partner of Strategic Treasurer. So I'm in charge of leading the group as we set both our strategy, the direction, the business that we're in. And we have 4 core businesses. One is advisory, so traditional consulting in all areas of treasury. So that's the advisory piece. We have an assist piece, which we always think of as headache removal. We do things that companies don't want to do. So it's staffing for cash positioning or forecasting or card management. We also do things like compliance work, like foreign bank account reporting, helping people move, divest, or merge companies. So managing the account activities or all the headaches that go along with that, and connecting them to all their banks and dealing with formats like a lot of the stuff that we're talking about here. And then third, we have an informed part of the business. So, we have CTMfile, which is a media outlet. We also have another podcast too in the same space for Treasury, the Treasury Update podcast, which is a Strategic Treasurer podcast. And then we have a podcast with CTMfile, the news or media outlet, which is the Open Treasury podcast. So maybe we can have you guys on that too. And then the last one is the research arm. So we do, I think, at least 12 annual research surveys that we run, as well as research for payment companies, fintechs, banks across the board. Those are some of the big things we do. I guess that answers probably most of your question, but happy to go into more detail.
I like the media part and the research part. So, like, what research have you guys done? Like, what does research mean? Like PhD research, or is it like meaning coming up with the next best treasury systems, or is it more like research into regulation, updates in the market, whatnot?
Yeah, so a lot of it's primary market research. We also do a lot of analysis on the space. So people may be looking at their roadmap. What do they need to do? What do they need to learn about that? And that's usually a combination of primary market research. So surveying people either through online surveys, through interviews, through some other methods. So it's primarily like we're gathering the regular data as opposed to secondary or looking at other research that's out there and summarizing that. So we'll do that to help, might be a private equity firm looking, where do we invest in the space? How is the space growing? How is it changing? What are the important parts of it? Or it could be product management. What should we roll out? What are the pain points? What are the hurdles? I can go on that for a bit, but those are some of the core areas.
What do you love about it, Craig, yourself?
About research or everything?
About everything you do. About the Strategic Treasurer in general. What gets you out of bed in the morning?
Yeah, so my alarm wakes me up sometimes, but usually I'm getting up. But I know that's not what you're, Mr. Literal. On the research side, I love seeing what's going on, because on the consulting side, I really enjoy talking to people, figuring out the issues and providing a solution that's calibrated to what their company needs. Not just a boilerplate, but, you have this type of complexity or this type of issue. Here's where it makes sense. And here's where it would change over time. So that calibrated solution never gets old, especially with all the new things that are happening in Treasury. So that's really exciting on the advisory side. The research side is seeing what's happening. Because we talk to a lot of people, you always develop, here's what I think is going on, lots of anecdotal information. And then you get a broader set of data. That usually helps you calibrate it more, because you see certain things and you think everything's like the 12 things I've seen this last 3 months. And you find hundreds and you're like, okay, there's some more nuances here that I have blinders on to. So this constant learning is really, really good at helping people think through that, how that's changing. That's extraordinarily fun intellectually. On the other sides, like inform and other pieces they're just good to have, ongoing relationships with companies and with tech firms. Those are, relationships matter, and those are important. So I love the new, and I love analysis and putting things together. So those are the things that matter, get me up out of bed.
And can you tell us a little bit more about those podcasts? So you mentioned 3 total, but maybe Open Treasury, we are on it right now. But so Strategic Treasurer and the Treasury Update. What are the topics covered there? The format, the mission? So Hussam and I started the Treasury podcast, the Corporate Treasury 101 podcast, because we saw there were not many. So now, when we found some, we want to know as much as possible. Can you share with us a little bit more info on those two?
Yeah. So the two podcasts. So the Strategic Treasurer themed one is the Treasury Update podcast. So that's the core one. That one is closing in on 5 years. That's our most popular one. We have themes of series related to becoming a treasurer. We have coffee break sessions, which are foundational topics, similar in ways to the 101, but probably more primary than that, like simpler, like more broad, you go fairly in depth on the 101. So we do all kinds of interviews there. So that's the broad educating the market and learning. The podcasts are great for learning. You talk to people, it's like, okay, you learn more and more nuances and different ways to apply. The Open Treasury podcast, most of the discussions, which are part of the CTMfile, so CTMfile.com is the website for media. But this is primarily discussions about news events that impact Treasury. So we're talking about those every week. It gets released on Friday mornings. What's the news? Why does it matter? Sometimes it's edgy. Sometimes it's, let's just talk through, economic things or different Treasury news. And we have, people that participate on there, to just hear their views on what's going on. Why does it matter? What's the big theme for the week?
So, and the Strategic Treasurer, what's the difference with the two others then? There is a podcast, Strategic Treasurer, or did I mistake on that one? Okay.
No, it's just the Treasury Update podcast so if we look at the
link to the
two primary brands, Strategic Treasurers, Treasury Update podcast, CTMfile is Open Treasury podcast. So there's not a third one. Please don't make me do a third one.
Talking from experience, it must be quite some work indeed. Already.
No, I'm on the Open Treasury podcast, every couple of months, not very regular. I'm on the Treasury Update podcast every week. Usually, I'm not the only one that speaks on that, but we put out quite a bit of content there.
Awesome,
good. Well, everything will be. If you're listening on Corporate Treasury 101, everything will be in the show notes below. Anything else, Craig, you want to that we haven't talked about at all, that we haven't exhausted your brain on, that you'd like to get a word in on?
No, I'm good. I've appreciated the discussion and, having you ask questions, maybe not being based in the US. It's kind of interesting because you assume so many things where you're coming from. And when you look at different payment processes in different countries, you're like, okay, I've got to understand this from the base. And you always start from your own orientation. That difference of private and central bank payment processes. Yeah, I remember that being like, you don't have to? Why don't you have to? Like, where did that come from? Like it's, and it's really pretty unique where you have this private enterprise. And so, being such a huge economy and banks having power, and I guess probably, American independence is probably where that originated from. And it's something you can do in the size of economy. If you're in a country that's $1 trillion, how could you support that? It might not be nearly as efficient. So thank you.
Thank you very much. Craig, maybe one last question. If people want to know more about you, the Strategic Treasurer or your podcast, where should they go?
I would go to strategictreasure.com/podcast, or ctmfile.com, or look up Craig Jeffrey, Jeffrey, on LinkedIn and send an invite or just send a note asking to connect. Those are good ways to start.
Awesome. Thank you very much.
Thank you. Thank you both.
Thank you, Craig.
This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.